Taking the field for our trader game, Top That Trade, Phil Flynn, a Fox Business News Network contributor, and Alan Nuckman, the chief market strategist at BullseyeOption.com. Round number one, bank boomerang. Stocks have bounced back, but banks are a few dollars shy. Why? And what bank is a buy?
Well, I think all the banks are a buy as a group. So I look at XLF, which is the banking ETF, the financial ETF. It did make its highs in 2022. So it's backed off. It went from 40 down to 30. So we've come right back up to that 40. Not made new highs yet. It should just be a matter of time, not if. But a breakout above those highs, that target's 50. The PE is 12 in the banking sector. So there's a lot of upside potential, even with all of the noise and nonsense that happened last year.
There used to be an ad for the old Harris Bank that said it's the big bank with a little bank inside, right? You know, I'm afraid that the big banks are going to have to accumulate a lot of the little banks right now. The regional bank crisis has had a major impact, on the markets, and we see it a lot in commodities. A lot of these banks fund commodity positions. They have record amounts of derivatives, right? And when these banks start to get shaky, it can impact the market.
Round number two, commodity frenemies. Big oil and ag are teaming up to fight electric vehicles. Who wins this drive to survive? Are you team oil and ag or team electric?
It reminds me of the old song in that old musical, Can the Farmers and Ranchers Get Along, right? And here are two sectors that historically competed against each other, right? Big oil didn't like ethanol. They didn't like biofuels because it cut into their bottom line. But they're starting to see that working together in a world where we're going to need a lot of energy suits both of their purposes. I think what we're finding here right now is that when we shut down on biofuels and make it more difficult to produce oil, it makes us less secure. And there are ways where they can work together, lower their greenhouse gas emissions, and that's a win-win for everybody.
Wonder Twin Powers. It is an interesting alliance, but they want to work together. I like both oil and corn from a price perspective because that's all I care about is price. And when the dollar index heads back down again, and we've got rate cuts coming, that's going to be a catalyst for both of those guys, not so much for electric vehicles.
Let's take it to round number three, too hot or not. The U.S. stock market is leading the world. Are you hot or cold on the market?
There's no such thing as too hot, in my opinion. You can always cool down. That's how I live my life in the sunshine. The markets are hot. The job market is hot. We've got everything cranking right now. S&P 5,000 is here. So in my opinion, there's no too hot because all it can do is delay when they start cutting rates. It's not a matter of if, it's just a matter of when. And there's almost a 25% chance in March. So they're coming fast. And the key is they're not going up. And so even if they stayed here, they're not going up.
Well, the U.S. is going to lead the world on rate cuts because everybody's going to look to the U.S. And adjust their moves accordingly. And that's one of the reasons why the safe bet is the U.S. stock market right now.
On to your bonus round question. The Super Bowl winners will pocket $157,000 apiece. Will the losers take home a pay?
The answer is yes. You receive money.
I'm going to have to agree. Yeah, because it wouldn't be fair. You got to get something, maybe a nickel.
The Super Bowl loser players will receive $82,000. It pays to be a loser, but you guys are winners. Business First AM will be right back.
There you go. Do the losers get a Super Bowl ring? That's the other question.
A pinky ring. They get a pinky ring.
Oh, do they? Okay, good. I thought they got one out of the box of Cracker Jack, but who knows?